All right, we are live. So welcome back to Dapp University. So today we've got a lot to talk about in our live stream. We're going to talk about yesterday and why we got some bad news for crypto. All right, we're going to look at this. We're going to look at a lot of other updates that have happened in the space. There have been some crazy DeFi hacks, some vulnerabilities surfaced that we're going to talk about in this video. We're going to check on the crypto markets. We're seeing some red across the charts today. Of course, it's got to do with yesterday's bad news. We're going to answer some of your questions and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, land your first blockchain job, I can show you how to do that over at dappuniversity.com/bootcamp. So we got people jumping in the chat here. We got Dale, Technically, Kodia, CodeChap, Rufel, I'm saying that right, Automatic Beats, Venture Warrior, Jay Lee, Eileen, Tina, Bruno, Adam, Andre, or Andres. I'm not sure how you pronounce that one. Welcome. All right, so let's jump into this. Let's talk about yesterday and why it was a big deal for the crypto space and why it was essentially bad news. So what am I talking about here? Well, yesterday during our live stream, I talked about how yesterday could be a crazy day for crypto, okay? We'd likely see some volatility in the crypto markets for one specific reason, okay? We got that. All right, if you look at any crypto chart, just a few hours after our live stream, which I talked about would be around 2 p.m. Eastern time. What do you see? Right about 2 p.m. Eastern time, you see some crazy volatility in the crypto space. I was watching this in real time. There were people getting liquidated, both long positions and short positions, because they were getting stopped out, liquidate, all kinds of crazy stuff happening because we saw a massive pump, dump, pump, right? And then subsequent dump after that. Significant amount of volatility. So why is that? Well, basically, we had a Federal Open Market Committee meeting yesterday, FOMC meeting. This is the meeting of central banks, talking about the monetary policy. Again, crypto has been in a downtrend pretty much all year, mostly for one major reason, all right, which started the whole thing, which is basically the central bank making a U-turn in its monetary policy from one of expansion to one of contraction to try to get inflation under control, okay? And so basically, it means raising interest rates, reducing the monetary supply from one of quantitative easing to one of quantitative tightening, okay? And basically, crypto and every other market has been getting absolutely hammered since the beginning of the year, okay? I mean, really, even the real estate markets. I mean, we're not talking about necessarily every market seeing prices just like fall in real estate, but the interest rates have gone up, where it's made housing affordability that much worse for people who are financing their purchases, which is a vast majority of people who are buying single family real estate as well. Because the rates that the federal funds are set by the Fed highly influence other rates in the marketplace, including mortgages. So anyways, that's what's been going on pretty much all year. Yesterday, we had the Fed meeting to talk about what they were going to do with interest rates. Again, the whole point here is to essentially try to get inflation under control. Again, I don't pretend to be on this channel to be a fake guru for macroeconomics. Like, that's not what I'm trying to do at all, but I'm trying to, clue you in on the conversation that, is pertinent to crypto. People say all the time, well, why does it matter to talk about like macroeconomics when it comes to the crypto space? Well, because it has a high influence on the price of cryptocurrency. Any other asset, crypto is no exception, and so you have to pay attention to the conversation. And my goal is to tune you into that conversation so that you can understand what's happening there. I'm not trying to predict the future, by any real degree of accuracy. I'll give you some of my general long-term forecast, but I'm not trying to be the person who's reading the tea leaves in every single data point in the macro economy to tell you what's going to happen tomorrow. If you watch a lot of those people, you're going to find very few who have a good track record over a very long period of time. So that's not what I'm trying to do here. But yesterday, we saw the federal funds rate go up 75 basis points, essentially an announcement that they're going to do that. So what does that mean? Well, essentially, at the beginning of the year, that's about raising interest rates. They started off with 25 basis point rate hikes. That means 0.25% that you're adding. You're not increasing the amount by 0.25%. You're adding 0.25% to the rates. If you go if the rate's 1%, you add 0.25 basis point, it goes to 1.25%. If you add to the 0.25 basis point, it goes up to 1.5%. Okay. So we started off 0.25 basis points, went to 50 basis points. We have been on a stretch of 75 basis points. Okay. And yesterday we talked about how, 75 basis points was the expectation, and we got a 75 basis point rate hike. Now, yesterday I talked about how there's two things to watch out for. One is, does the market get what it expects, which is basically 75 basis points? And the answer was yes. Okay, so that was in one sense like, good news, air quotes, because again, markets are mostly about expectations rather than, good or bad. It's all relative. It's all relative to your expectations, right? So if it's already pricing in, if it already has bad expectations, which essentially it was expecting 75 basis points, it got that, all right? But there's more to it than just that, okay? And we talked about this as well. You can't just look at the actual numbers that come out, okay? It's also looking at the essentially the press conference speech that happens after, and basically what the words, what the content of that speech is to determine how are they saying things. Like, can you read the subtext of what they're actually saying? What's their longer term outlook for crypto and everything else? And that's, I think, where people really started to get a little, form a negative view of the space based on that press conference, and also, some of the other, factors in the announcement. So let's kind of dig into that. So here's a quick recap of what was said. All right. It's basically the Fed Chair Jerome Powell said that the central bank will not count the lagged impacts of shelter costs. Well, actually, let's not. This doesn't matter so much. Let me go find the next. Let me go find the point that I was trying to get to here. Hold on one second. I imported this article into a different app so that I could look at my highlights, and I think my highlights disappeared. Okay, let's try this. Let's jump back in here. So Powell reiterates his stance from Jackson Hole. Says so. Jackson Hole was a previous press conference that he did. I think it was 2 months ago. I can't remember off the top of my head. But he's basically saying he's just being consistent with his point here. Said that his views haven't wavered since the market jolting speech from Jackson Hole a month ago. So I guess it was a month ago, not 2 months ago. My main message has not changed since then. Basically, the Federal Open Market Committee is strongly resolved to bring inflation down to 2%. It will keep it until the job is done. Okay, so we definitely do not see inflation anywhere close to 2%. If you look at the aggressive measures that have been taken so far and the rate that inflation has changed, that it basically read between the lines, it's going to take a lot of work and a lot of pain in order to actually reach that target. Now, there's all kinds of other parts of this conversation as like, are they going to break something else along the way? If they do break something else along the way, are they going to be forced to pivot from that goal? Okay, so we'll see. But anyways, I think the interpretation here is that, more pain is to come, and that's really the bad news. So he adds so far that there's only a modest evidence that the labor market is cooling off, citing a slight decline in job openings, that quits are off their all-time highs, and that payroll gains have moderated, but only by a little bit. Well, here's the problem, though. I mean, again, I really don't try to pretend to be a macro expert, but I think, or comment too much on, the effectiveness of monetary policy. But one thing that really that doesn't make any sense to me is, again, I'm just thinking out loud here. So if anybody has an intelligent rebuttal to this, I would welcome the response in the comments below, which is basically, here's the thing. Like, if you make the stock market go down by over 25%, right, and, you raise the cost of basically everything with inflation by a lot more than 8.5%. Like, that's just what the number says. Like, if you track your actual expenses, like, your expenses have probably gone up like 15 to 20% over the past 18 months or so. Okay, so let's say that you're like advanced in age, let's say you're over 50, you're thinking about retiring, and then your retirement just went down 25% and the cost of everything else went up. So whatever number you were like looking at that you needed in order to retire, that number just got bigger in terms of your actual, needing to live off of those expenses. And then your progress towards that just took a 25% haircut. So guess what that's going to do to the labor market? That's going to make people keep working because they can't retire anymore. So like, this whole thing kind of has a self-fulfilling prophecy with, inflation itself, in my opinion. So if anybody can help me think of a better way to think about that, let me know in the comment section below. Again, I don't pretend to be a macro guy. Something just seems off about that to me. So the central bank will need to bring funds the funds rate to a restricted level and keep it there for some time. So that's also like the bad news is also saying that we haven't even really gotten to the level what he would consider like really restrictive. Like I gotta find the quote, but he was basically saying like we're just at the beginnings of what we think is restrictive. All right. So if everybody thinks that the environment right now feels painful, I reading between the lines, like this is just the beginning of the pain. Okay. So that really is kind of the bad news, is that it looks like we're still in the early phases of what they are trying to accomplish here, which, does not bode really great for crypto and equities, really, in the medium term. So, this target rate suggests another 75 basis point increase is possible in November, and a 50 basis point hike could be in store for December. Okay, he also added the 30-year bond yield was dropping while the short end, like the 2-year, was rising rapidly. Yeah, we've seen the 2-year bond yield go up like really fast, basically like parabolic. So that just suggests the Fed will be credible in their fight against inflation. Okay, so, what does that mean? So essentially, we're already seeing the markets perceive this as negative news, all right? We're seeing it in crypto, we're seeing it in stocks, okay? Really across the board. Again, I don't really try to make short-term price predictions based on this type of stuff. I really try to look at the long game. But really what this means for the long term, in the sense of being bad news, is just there's going to be more headwind, okay? I talked to you yesterday about how we're kind of treating these FOMC meetings kind of like Groundhog Day. Like we're waiting for the groundhog to come out of its hole and see if it gets scared of its shadow, and whether that means we're going to have 6 more weeks of winter or whatever the number is, or if we're going to have spring, early. And I think the message from yesterday was the groundhog got scared of its shadow, is going back into the hole, and we continue to have winter for an undetermined amount of time. So, I mean, that's what it looks like. Now, that being said, over the long term, of course, I still think we have a ton of, upside potential. Everybody and their brothers got some opinion online, on Twitter, on YouTube, whatever, about how long the crypto bear market's going to last and what's going to happen in 2023. Down to a T. So I would say if you were trying to assess the validity of those claims, I guess go back and see what those people were saying in September, October, November, December of 2021. See how consistent and accurate their analysis is. But yeah, so what do I think is going to happen? So basically, I think we should expect headwinds, keep those expectations. I do not expect crypto to just make some massive like V-shaped recovery right here and then just blast off into infinity. Okay, just because of the backdrop that we have. Now, here's the other thing is, am I so bearish to think that we're just going to continue in down-only mode for an undetermined amount of time? I really, I think about these things in terms of likelihood. Like, nobody truly knows what's going to happen. Let me see if I can turn this light on, see if that'll help. Nobody truly knows what's going to happen, right? But I always try to rank things sort of possibilities. Like, is Bitcoin going to go to $100,000 and Ether going to go to $10,000 like next month? Like, it's technically possible, but it's probably not going to happen, right? Probably not going to happen. On the opposite end of things is Bitcoin going to go to zero and is Ether going to go to zero like next month? It's possible, probably not going to happen, right? So the truth is probably somewhere in between. So I rank those things in terms of likelihood. Now, the most likely scenario, in my opinion, is that we don't just see continued just like downward price action for an undetermined amount of time. You know, is it possible that we make new lows in major cryptos like Bitcoin and Ether from the previous levels we saw this summer? It's possible. Do we, you know, is it, in my opinion, is it more likely that we have sort of seen the lows and we revisit them and maybe you get a little bit lower than what we saw? I think that's more likely, in my opinion. Okay, again, not financial advice. I don't claim to know exactly what's going to happen. You know, my sort of view is that the market would reflect sort of uncertainty with a slight bearish bias until we get some sort of, you know, clarification on, you know, kind of what's going to happen in the broader economy. Because here's the other thing is, you know, assets can still go up in higher rate environments, okay? I think a lot of what we're seeing here is repricing based upon future expectations and, you know, the conditions changing, right? So let's say that the central bank raises rates and then they sort of to a level where they're just going to keep rates higher, but we're not continuing to just aggressively raise them, okay? And then we sort of find a new status quo that's just a higher rate environment, but we're not just continually rising up. Like, that's still potentially an environment where we can make a lot of progress, like once the stock market has kind of repriced to a new normal, okay? Because at some point it's probably going to overshoot, you know, overcorrect and be, you know, oversold essentially. And so you might argue that we're there now. I don't really know. But, you know, we could still get there and then start to make progress towards new all-time highs, okay, and actually reverse our trend before, you know, we start just cranking rates back down to zero again, if we even do that again. You know, that's a real question. So, I think the short term, we still have headwinds. It's bad news, but I think the good news is I don't think we have to just wait like, you know, an insane amount of time for all these targets everyone's looking for to get reached before we can start, you know, start the party again. Somebody says, I feel like the whole world's in a bear market except a few specific markets. Yeah, it's a crazy time out there right now. We'll see here. So Nathaniel says, worst case, merge issuance change did nothing and the cycle follows 2018 cycle exactly, bring ETH down to around $400. I mean, I think it's a possible scenario in the cards. Let's look at this. So let's look at a couple of things that happened this space since yesterday. I don't want to just talk about, you know, bearish macro crypto news, etc., etc. All right. So a couple things to watch out for is I meant to talk about this yesterday, but we kind of ran out of time on our stream. But this popped up as something definitely had to pay attention to. So essentially, we saw a vulnerability in Arbitrum that was disclosed and patched. Okay, so this was not exploited by an attacker. But let's actually pull this up because I think it's an important thing to understand. Kind of watching this space. Basically, rush to find a way to lower transaction costs on Ethereum. Blah, 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 blah. That's what Arbitrum is, layer 2 scaling solution. So Arbitrum paid about 400 Ether or $53,000 to the attacker who flagged this vulnerability. Basically, it was a change in the latest version that would allow the attacker to steal all funds sent to the network. Okay. The threat was found in the way transactions were submitted and processed on the network through, you guessed it, a bridge. Okay. So, which basically allowed people to transfer tokens between different blockchains. Attacks on bridges have become one of the biggest security threats in crypto, accounting for almost $1 billion stolen in the past year. So the Whitehat hacker, known as 0x Riptide, said the vulnerability would affect any depositor attempting to bridge funds from Ethereum to Arbitrum Nitro. Okay. So again, I'll pull up the thread to talk about this. But so what's the deal here? So anyway, Arbitrum is a layer 2 scaling solution. Basically, people talk about Ethereum being too slow and too expensive to use. The ETH merge didn't fix that problem. Surprise, surprise, like I was talking about. But that's okay. Like that's what layer 2 scaling solutions are for, is where you create the second environment. It's kind of like a blockchain, but you pay the gas fees in ETH, and it uses Ethereum for its security. So anyways, we have multiple layer 2s out there. Arbitrum is one of them. Okay, and we've been talking about bridges this whole year. We've seen a number of hacks from bridges. I've issued many warnings about using bridges, okay? And I've always said we're in kind of this catch-22 because, I'm a proponent of the Ethereum layer 2 space, and really the best way to get on those things is with bridges, all right? So anyways, this was another potential bridge exploit, but thankfully it was stopped. And thankfully we have white hats who are in the space who are stopping these things before black hats, do this or take advantage of it. So let me just find it here. And again, this is one of the reasons I have been talking so much about sort of hacking on this channel and doing some tutorials on hacking. You have to go check those out on my YouTube homepage, is because this is such a service to the space, is to learn white hat hacking and, help find vulnerabilities and disclose them, because you can get rewarded big time for this type of stuff, by helping other people, because there's such massive funds at risk. So my bug bounty write-up on a critical vulnerability I discovered in Arbitrum Nitro, which allowed an attacker to steal all incoming ETH deposits to the L1, L2 bridge. So I thought it was in a tweet thread. Hold on. So basically, he's talking about the story of wiped storage slots and well-intentioned gap optimizations that led to multi-million-dollar vulnerability affecting any would-be depositor attempting to bridge funds from Ethereum to Nitro. So he hunts for bug bounties that are posted on ImmuneFi. So definitely go check that out. I've talked about ImmuneFi several times on my channel. Talk about this is a place where you can go look for people who are willing to pay you money to look for bugs. Okay. Basically, he looks for vulnerabilities solely within smart contracts and Solidity. His current interest is in the cross-chain arena due to the complexity involved for developers of these projects and the significant amount of funds at risk due to the current honeypot structure of most bridge implementations. So if you're not familiar with what a honeypot is, basically it's just a giant... it's kind of a double meaning. People use it in different ways. A honeypot technically is like a thing where you're trying to attract somebody to trap them. Like if you're talking about like a honeypot, like in a sting operation, that's what it is basically like having something that could attract. You think about like a honeypot, you're trying to catch a bear or like a bee even, or like a bear really. And then you like trap them because they're trying to get honey. Like, so you put a honeypot out there for an attacker, but people use it in a more general sense of like a honeypot is just something that attracts a hacker because it's got so much money inside of it. Okay. So anyways, He says, I enjoy searching for vulnerabilities in smart contracts because I know there's 100% certainty developers will make a mistake during either the deployment, development, or upgrade of a protocol smart contract, combined with the fact there will be millions or even billions of dollars at risk, plus hefty bounties for finding these vulnerabilities, and it really becomes fascinating experiment, okay? So he says, when you stumble upon uninitialized address variable and solidity, you should take a moment to pause and investigate further because you never know if it was purposely left uninitialized or if it was by accident. And that's basically what happened with here was this delayed inbox, okay? This left some slots empty and basically would allow somebody to exploit the bridge. So I'll put a link to this down in the comment section, or in the live chat replay, if you want to read sort of his analysis and how he found this. If you want to try to do the same type of thing, then I will put a link to that down below. Or in the live chat, I should say. Would hacking skills help you land a job in the DeFi space? Definitely would. Definitely would. Because here's the thing, even if you don't become like a security auditor yourself, like there's a couple ways to think about security auditors. You could be a security auditor who's sort of like the last guy to check on a project before it goes live to the mainnet, all right, to make sure there's no vulnerabilities. Or you could be a security auditor who looks at a live project and sees if there's any vulnerabilities and how you patch them, right? Either way, that person's got a ton of responsibility because this person is whoever hired you is counting on you to be a respected authority in what you're talking about. You have to have a high degree of competency in order to be really successful at that role. Unless, but that's how it's supposed to work. It doesn't always work out that way. Sometimes you get people who don't know what they're doing, who are just in it for the money. But typically they're not going to last very long in terms of reputation. But anyways, that's a tall order. Okay. Now you might, like if you're watching this video, you might be super talented and you might work really hard or both. Okay. And you actually get to that level and you're able to handle that sort of pressure. That's good for you. But even if you don't do that, I guess what I'm saying, it's a high pressure, high talent situation. Understanding hacking and security auditing will still make you a much more valuable developer, okay? Because the last thing a security auditor wants to do is receive a project that was clearly written by someone who doesn't understand security at all, and they have to like tear this thing apart and go back and forth, blah, 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 blah. And so the more you understand about it while you're going through your development process, the better, because then that's gonna, like, if you were able to present a project like with zero problems to a security person before it gets put out there, that's going to make their job so much easier and it's going to make you more valuable as a developer. So that's another reason to understand this type of stuff. Someone says bug bounty hunters are more effective, I think, than salaried insiders. We can be for sure because of the incentive structure. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. It really helps these videos out so that more people can learn about blockchain. And if you're as fast with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those, or hey, maybe you want to take a massive shortcut entirely, head on over to dappuniversity.com/bootcamp. You have to be an expert. Get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching Dapp University.